Welcome to Getting Real with Real Estate with Danielle Kempf and Jim Kempf, St. Louis's favorite father-daughter real estate team. Your source of real estate information in the greater St. Louis area.
All right. Well, here we go.
Here we go.
Another podcast episode. We have a great guest with us today, Mr. Jerry Vaughan with New American Funding. Thanks for coming by
thank
today.
you.
I'm happy to be here. I appreciate the invite.
Absolutely.
And we appreciate it.
You gonna tell how you know Jerry?
Yeah, that's exactly where I was going to go. Jerry and I worked, the longest deal in history, probably together.
Maybe,
That's how we got to know each other. And man, I tell you, just everything you did throughout that deal to help our mutual client was just amazing, because that just went on forever.
It was the craziest situation. I mean, the recap, if I recall it correctly, is that the seller, before he sold the house to our client, had a little sliver of land, very small piece that he sold to the neighbor.
He actually sold a second lot, right? He had like a double lot, so he sold that to the neighbor.
And when they recorded the sale, they accidentally recorded the legal description for the entire house, the property, and that lot to the neighbor. And the neighbor was quite willing to help work it out and help us figure it out, but it was his mortgage servicing company, now that their lien carried across both houses, refused to release the lien on the house, and unless they got a little skin in the game.
Something was
I couldn't believe it.
It took forever.
You know, those mortgage people, what are you going to do? Oh my goodness! But yeah, I could not believe that. But
it was something else.
It was like a year and a half.
Yeah, because you guys started it before I got my license, and then by the time I was licensed, and maybe few months in, 7 months in, you guys finally closed.
Yeah, it was the craziest thing, but it all worked out in the end, and our client got a great house, and we stuck up.
We got a great referral partner.
Yeah, we got a great friendship too. So that's the best part of it all. So
and I think for the client, rates went down in that process.
I think they actually did,
which they don't do that anymore.
Right.
But,
and that was all through like the COVID times too.
Right.
And so like everything that everybody was doing, they blamed it on COVID why they couldn't get it done. So that compounded the whole problem that we had.
Yeah.
So it was crazy.
But it worked out.
It worked out great.
Anyway,
Not to digress, but Jerry's here today. We're gonna talk a little bit about VA loans.
Yep, VA
today.
loans 201.
Jerry's an expert at that stuff. But before we get going, Jerry, talk a little bit just about New American Funding and how long you've been with them, and a little bit of your history and yourself. And
you bet. I've been doing mortgages for over 20 years now, so that's where all the gray whiskers come from. I've been at New American for almost a year now, but I really love New American. I love the fact that we service our own mortgages. So when you close on your loan, it's not going to be sold to this bank and that bank after the fact, and we offer a wide variety of products, and we are a direct lender. We don't have any overlays to Fannie Mae, Freddie Mac, VA guidelines for the most part. We pretty much, whatever their guidelines are, that's what our guidelines are. So it makes life a little bit easier for clients. We have probably the smoothest pathway for approval.
Cool.
So it makes things nice. But
that's great. Yeah. All right. You still fishing?
Almost every day.
Yeah.
Right?
Check out his Facebook page. It's just aesthetically pleasing, just the fishes and the sunrises and the flowers. You were showing me at coffee the other day.
Right.
Yeah.
It's my daily meditation.
I love that. That's so cool.
When I've got a line in the water, the whole universe just shuts down, and it's just me and sometimes a fish.
Right.
Every now and then a fish shows up. Yeah. So.
That's awesome. All right. Well,
you want to dive on in?
Let's go ahead. Yeah.
All right.
Go ahead.
I'll ask the first question.
Yeah.
Okay. Jerry, explain like your typical VA customer. Obviously they're a vet, but kind of explain the qualifications around the VA program and kind of what that person looks like for you.
So yes, the VA program is designed for active duty service members, people in the regular military, in the reserves, National Guard. Also for veterans. So depending on when you served or where you served, you had to have been in the military a certain period of time. And then also, what a lot of people don't know is that surviving spouses of deceased service members, some surviving spouses, typically if they haven't remarried or whatever, they can still get their spouses' military benefits. Spouses of MIA, POW service members, they get those benefits as well. And it's amazing to me that I think I saw a survey online where some 15% of the service members that were polled that went conventional financing didn't know that they even qualified for VA benefits.
Oh, wow.
And so, because you do have to have served for a certain period of time, but there are also some discharge statuses that if you are discharged for this reason or that reason, you still get the VA benefits even if you didn't serve the length of time necessary. So a lot of service members, they're in, they get hurt, they are discharged honorably, medically, and they don't think they met the guidelines, but in fact they do. And so a lot of veterans don't even know they qualify.
I'll be darned. Wow. And that's a fantastic benefit too. We'll talk more about that, I'm sure.
Well, do you just want to dive on into that?
Yeah, go right ahead.
So the main benefit is that the VA doesn't require a down payment.
Right.
Yeah.
And
awesome.
and
It's
so
100%
100% financing. And you can couple that with down payment assistance programs. So for instance, the state of Missouri has the Missouri Housing Development Commission, which will provide a certain amount of money toward down payment or closing costs. So if you don't have a down payment requirement with the VA, then MHDC steps in and covers the closing costs, so a veteran can easily get into a home without any money out of pocket.
That's fantastic.
So
That's really
great
cool.
program
Wow.
for,
Yeah.
if you qualify for both.
And certainly well deserved for those who have served our country.
absolutely.
Absolutely.
Yes.
So, I guess in terms of like the basic qualifications, are they just similar to like your Fannie Mae and Freddie Mac qualifications? I mean, are they?
No. So with typically Fannie Mae, Freddie Mac, the minimum credit score is 620.
Okay.
With the VA, there is no minimum credit score requirement, which a
Okay.
lot of people don't realize that because lenders will often put their own minimum
Right.
credit
Yeah.
score requirement. In fact, most do.
Okay. Yeah.
So typically you'll find your average lender with a 580 minimum credit score, sometimes even 620. At New American, we're 500. So
Wow.
you have to have at least a 500 FICO score. Now, of course, if you don't have a FICO score, let's say you've been overseas in the military, you don't have any American credit built up at all, you don't have a credit score at all, then we can do a non-traditional credit file for that person in certain circumstances and get them qualified for a VA loan even if they don't have a credit
Wow.
score at all.
Oh.
That's impressive.
Okay.
Very cool. What is that process like? I mean, I have not heard of that before.
So, and it's not just a VA
Right.
requirement. We can also do that for FHA. Some lenders can even do it for conventional. But with non-traditional credit, if you've got at least three, typically it's three non-traditional credit sources that you're paying every month. So. Your utilities, electric,
Yeah.
your gas, your water, sewer, your mobile phone, your car insurance.
wow.
Okay.
You know, if we can get at least three creditors, so to speak, where we can verify that you've for the last 2 years or more been paying every month on time, then we can contact the credit reporting agencies, and they will confirm that with the gas company, with the mobile phone company. They'll confirm the payment data and then create what's called a non-traditional credit report for us.
Wow.
And we can use that to help people qualify.
That's
If
awesome.
for college students,
Yeah.
Yeah.
and it does happen for service members who have been kind of off the grid for
Right.
a while because they're active duty military.
Yeah.
They've been, they don't have a lot of U.S. credit.
Right.
Then we might be able to help them with that.
I'll be darned. That's
I
very
didn't know
cool.
that.
Yeah, that's awesome. Learn something new every day. That's great.
And that's why I'm here, right?
Yeah.
Exactly.
Exactly why you're here. You bet.
So does the VA, do those have to apply to like the Fannie and Freddie Mae guidelines?
They don't. The VA guidelines are different than conventional. And I'm really talking to our listing agents out there right now because if we get any static, it's from a listing agent that's like not making a home available for VA financing, or maybe letting sellers know that, hey, we want to go cash or conventional because VA is harder.
Right.
The bottom line is that's almost never the case.
Right.
Okay.
It is often easier to get a VA client approved than it is conventional.
Okay.
Because the VA really wants to make sure that service members are able to own their own home.
Right.
Yeah.
Why pay somebody else's mortgage, right?
Right.
You know,
Exactly.
the VA programs are really designed to try to give the veteran the best chance to succeed in this world, and being a homeowner versus a renter is really that chance.
Exactly.
And so the guidelines are often a bit more forgiving. Debt to income ratio guidelines are more forgiving because with a VA loan, they've got their own debt to income calculation called the residual income calculation. And so sometimes you can see the traditional debt ratio calculation 10-20% higher than conventional guidelines, but they can still qualify because they're able to meet the residual income calculation with the VA. And so overall, I would say that a VA loan gives a veteran a better pathway, not just from a credit score standpoint, but also from a qualification and debt ratio standpoint than conventional financing.
Good. The VA does an appraisal, if you will, on the condition of the house, similar to, I guess, FHA, sort of, but a little different. Can you talk a little bit about that? I mean, kind of what are they looking for there in terms of the house itself, I guess?
And when I bring up the listing agent conversation, this is often where what drives that. It's
That's what some people are worried about.
The appraisal is going to be difficult, and the VA sends their own inspector out, or those kind of things. And so it's good to dispel some of these myths because, let's face it, these people have given a lot to our country to earn this program. And so if I could beat one drum, it would be sellers and listing agents, please consider VA loans, because the VA program doesn't provide significant obstacles versus any other type of loan. Traditionally, a VA appraiser is going to be looking for a house that doesn't have health or safety issues, that the roof doesn't have a hole in it, the foundation doesn't have giant cracks in it, right? But so is a conventional appraiser. An FHA appraiser is going to be looking for that kind of stuff. I think probably the one main difference is that VA is going to require a termite inspection. Right, and so it's kind of it's not part of the appraisal process, but it's part of the inspection process. That so there's a requirement for a pest inspection, a termite inspection. It used to be that they required that the seller pay for that.
Correct. Yeah.
But that's changed.
That has changed. Okay. Good.
Now the veteran can pay for it, right? And so that should not be a seller's sticking point anymore. I mean, typically they're like $75 or $100. It's not like a huge difference, but every dollar counts when you're when you're selling your house. I get that.
That's right.
And then in certain areas, maybe more suburban or rural areas where you've got wells, well water, that kind of stuff, then we're going to have a water test required. But for your buyer, these are things that they would want to know anyway.
They're going to do that anyway.
Yeah, buyers typically do the building and termite all in one too.
That's right. And so, really, other than that, there's nothing that a VA. First of all, there is no VA inspector that goes out. It's just an appraiser, just like anybody else. They have to be on an VA approved list. Now, I will say that the VA allows for the appraiser to have 10 business days to get the report into the lender. Now, at New American, the appraisers on our panel, they're real timely. But there are some appraisers out there, they take all those 10 days, right? They're like, don't rush me. The VA says I got 10 business days, right? And so when you've got some lenders that maybe they wait to order the appraisal until the borrower's been approved or something like that.
You gotta watch
that. May be a mistake with a VA loan. You want to get on the horse and let's get that appraisal going. At New American, we don't charge, or at least in our branch, we don't charge veterans up front for the appraisal, right? So there's no obstacle there. We just order it right away and make sure that we're getting that going. So
fantastic. Cool.
Awesome. Does the VA loan, do they have like a mortgage insurance?
No, they don't. However, they have what's called the VA funding fee, which acts in much the same way as FHA mortgage insurance or private mortgage insurance with conventional financing. But it's not paid monthly. It's a one-time charge. It's paid up front. It depends on what type of service you were in and how many times you've gotten a VA loan in the past. It determines how much that funding fee will be. But the VA allows you to add it to the loan.
So you can roll it in.
It gets rolled in.
Oh, nice.
So it's 100% financing. So let's say you're buying a $200,000 house and the funding fee is $4,000. That loan would be for $204,000. They're not having to come out of pocket with that. And for service members that have at least a 10% or higher disability rating, so they've got hurt in the service, right? And they've got a service-related disability. The funding fee is waived altogether, so they don't have to pay that at all.
No kidding.
Okay.
That's great. That's awesome.
That's very cool.
Okay, cool. You mentioned before, another question. You mentioned someone can use the VA loan more than once, right? That's fantastic.
Right.
Is there a limit on how many times they could use it?
No, it depends on how much of their entitlement is currently being used.
Okay.
So let's say you have a VA loan now on a home, you're being relocated, you want to keep that as a rental property, you're being stationed in another area, and you want to buy another home there. You can, as long as you've got enough entitlement left over, you can buy another one. You can have more than one VA loan at the same time.
Okay.
There are some expanded entitlement rules to allow for those kind of things as well.
And that's kind of specific to the veteran himself, right?
That's right.
Okay.
So each veteran has a basic. It's the same for all veterans. They have a basic entitlement, and then there's an expanded entitlement amount.
Gotcha.
Okay.
And so they can as long as they still have remaining entitlement, they can do that. If you had a VA loan and you sold it and you've paid that loan off in good standing, well then your entitlement is restored. So you've got your full entitlement benefits. So you can use it over and over and over again.
Okay.
Okay.
All right.
Very cool.
And then when it comes to seller concessions, you talked a little bit about that earlier, but are there limits as to how much, like as a percentage of the loan, that sellers can give as a concession to a buyer?
It's a 4% limit of the purchase price. So it's a little bit more than a similar conventional loan that where, if you got a small down payment on the conventional loan, I think they limit you to a 3% seller credit.
Okay.
So it's a little bit higher seller credit available for a VA borrower.
Okay. Very cool. Good.
You want to do that one?
Yeah, go ahead.
And then can you just explain what the process looks like for the veteran who, once they're under contract on the house, what that process looks like for them up until closing?
Sure. It's pretty much the same process as that you would normally expect. So the contract comes in, you get your grizzled old veteran loan officer putting all the details in place, getting all the wheels in motion, and we get the appraisal ordered. And typically your processor, loan officer work together to make sure all the documents are in, and it's really not a different set of documents. Typically you're looking at a couple of years W-2s, paycheck statements, bank statements, ID, that kind of stuff. We get what's called a certificate of eligibility from the VA. Veterans can get that themselves. That tells whether they're eligible for the, was their service appropriate for the VA? Do they have any outstanding entitlement being used on another loan already? Do they have a service-related disability, which waives all that's noted in the certificate of eligibility.
Right.
And so we get all that, and we send the loan to underwriting, get them approved, and
That's awesome.
bring it in for a smooth landing.
There
How
you
long
go.
does it typically take once you have that contract to fund the loan?
That depends on the lender you're talking to.
Okay, yes.
Right?
For New American Funding for you guys.
I mean, we have gotten VA loans closed in less than 3 weeks. So
Wow, that's awesome.
That's fast.
So the biggest hurdle will be the appraisal.
Right.
Yeah, because
Right.
you need that 10 days that you were saying.
10 business days,
Business
which
days.
can run into
Yeah, 2
like,
weeks.
That's 2 weeks,
That
right?
can be, right, yeah.
Right.
Yeah.
That's a long time.
But if you get the appraisal ordered quickly,
Right.
then and you're a good loan officer and got all your ducks up front and did the right things.
Yeah.
A good solid local processing and underwriting team, and there are lots of lenders. New American is the best, of course, but there are plenty of great loan mortgage companies in the area that, with good local processing and underwriting, they can get that done in 3 weeks for sure.
Yeah.
We definitely can.
That's awesome.
And sometimes a little bit sooner. I have a few real estate friends out there, and they know who they are. Hopefully they're watching. That have called me on occasion. The veteran has gone to that big box lender, and they shall remain nameless.
We won't. Right, we won't say the name.
We won't say names, but they've gone to some
but we
large
all cringe.
that big box loan factory, right, where you call 1-800 next available representatives, and we're down to crunch time, and something's wrong, and it's not happening, and the veteran is going to be homeless, right? And so I've stepped in on a few occasions and gotten those deals rescued, and so it can be done. And the moral of that story is not how awesome I am, which of course that's always the moral. But the moral of the story is that the VA loan program, if it's done correctly, should not be an obstacle for a seller to sell a home, right? And so that's if once again I'm going to bang that drum.
That's awesome.
Until we pull the plug on this thing, because that's an important message.
We appreciate the fact that you are local, and that is so true in this business. As agents,
for us.
I mean, we want to know we're dealing with somebody who can make decisions here locally. We've dealt with the big box guys and stuff, and it's not pretty. I mean, sometimes it's not pretty. You don't know who you're talking to, right? You might talk to one guy in
California, and then
the next guy's in Timbuktu, and the next guy's in God only knows where, right? So, and it's just it's a convoluted mess, quite frankly. So that's awesome. We appreciate that. Any other questions for Jerry? I think before we kind of get started wrapping up.
Not that I can think of.
Okay. Anything else that you can think of, Jerry, that we might have missed talking about VA loans?
Not that I can think of. The typical VA borrower, I will say that there, for service members that are just coming out of the service, the one obstacle that they may run into is their employment needs to be something related to what they were doing in the service. So if you were driving a truck for 8 years in the Army, and you've just gotten out 3 months ago, and now you're a financial advisor, the VA underwriters might not be able to approve that income because there's really no income stability to try to sink your teeth into. Right.
You just like a normal. I mean, that's normal though, right?
Yeah.
For anybody.
The
really.
income stability obviously is going to be an underwriting concern no matter what type of loan.
Sure.
But with the VA in particular, when you're dealing with folks that are just out of the service, then we really are looking at what they were doing in the service to make sure that ties up. And it certainly doesn't have to be, same apples to apples, right? As long as you can make a connection.
Yeah. That's good.
This person was in systems and engineering, and now they're doing something that's related in some way, even tangentially. Then we're going to make that work. But that's the one also. But for the most part, it is a solid program with favorable guidelines to get a veteran approved. And as long as you've got a team that understands those guidelines and can work within those timelines, then there should be no obstacles to get the deal done.
Well, I'll tell you what, I've been doing this a while, and you've cleared up just questions that I've had, just misconceptions, I guess, that I've thought about in the past too. So thanks for doing that. We appreciate it.
You bet.
And to all the veterans out there who might be listening to us, man, if you
firstly, we appreciate your service.
Oh yeah, 100%. That's fantastic. If you're in the position of thinking about buying a house or wanting to buy a house, get with a guy like Jerry. He's the best at what he does. He can help you through the process. Give us a ring. We'd be happy to just chat about.
He's the numbers guy. He has all the money. Once you have the money, we'll help you find the house.
He'll tell you how big a house you can afford. We'll help you buy that house.
Exactly.
But we'd appreciate the opportunity to earn your business. Feel free to reach out to us anytime.
Feel free to reach out. Awesome.
Anything else?
No.
All right.
I think we're good. Awesome.
Sign off. Jerry,
thanks for coming on in, Jerry.
Thank you very much. I thought we talked about a joke of the day. Are you guys not going to tell the joke? I'll tell the joke.
Tell the joke.
Okay, we'll tell it now. Go for it.
Why did the chicken cross the road?
To get the other side.
Because!
Yeah, we didn't start with the joke.
We'll end with the joke today.
End with it.
All right.
Thanks for
guys.
tuning in.
Thanks again, Jerry.
Bye-bye.
You've been listening to Getting Real with Real Estate with the Kempf team. Have questions about real estate or something you'd like to discuss? Contact the Kempf team at 314-336-1926 or visit our Facebook page at facebook.com/the Kempf team. Don't want to miss any episodes? Follow us on your favorite podcast app or YouTube. The Kempf team. Real, honest real estate.